So you will see how technical analysis actually is not something new. It has been evolving time after time. And then if you apply it, you can make money. And there are so many ways to use it, from which approach you want to trade the market, all based on technical analysis or charts. Okay, so before we begin, I have to read out to you this disclaimer. Okay, this talk is for information and educational purposes only and should not be construed as a solicitation to buy or sell any of the stocks mentioned herein. The speakers or his staff may have positions in some of these stocks. Okay, so back to our topic, technical analysis plus application makes money. Mr. Fred, what do you think about this statement, making money with application?
Yeah. Technical analysis is so wide, covers from A to Z. And in the next slide, I think we will show to you how technical analysis has evolved through the ages. And really, any technical analysis, if you know how to put them together correctly, they all can help us to make money. And today, we will show you a couple of the techniques that is available in technical analysis that could help us make money from the markets.
Okay, so you want to show them the evolution of technical analysis throughout the ages.
That's right.
Okay, let's take a look.
Yeah.
So, Mr. Fred, here I can see we went as far back as the 18th century. Maybe you want to explain how it has evolved.
Yeah, and I don't know, now a few of us realized that actually it was the Japanese who actually discovered technical analysis, or at least they were the first ones to use technical analysis, and not the Americans, as many people have thought. And the name of the person who actually made it so famous is called Munehisa Homma, around the 1700s. He was a great trader and traded, excellently, and he was even conferred the samurai, which is equivalent to the dato-ship, nowadays. And so after Japanese has discovered the candlesticks, the American by the name of Charles H. Dow came on the heels of Munehisa Homma in the 1890s. He discovered the bar chart. So the bar chart would be the next in line after the discovery of candlesticks. And thereafter, the moving averages actually were discovered. I do not know how many of you know that actually Mr. Hooker, T.J. Hooker, actually they discovered the moving averages, which until today, it is still very much in use. And later on, Adnan will be explaining to you how to apply the moving averages to trade our markets, or in fact, any markets in the world, and make money from those trading, applying those indicators. And then comes the golden era of technical analysis, which is around the 1920s and 30s, during the roaring 20s. And the crash of the 20s, and then of course then the recovery of the 30s. During that time, it was the golden age of technical analysis, and great traders, and for example, Richard D. Wyckoff, for example, Elliott Wave, R.N. Elliott, for example, W.D. Gain, for example, Chuck Patton-Surge, Richard Schwabacker, and the cycles, Mr. Edward Dewey. They belong to the era of market structure, and this was the golden era. And then came the 1960s, where they built onto the golden ages indicators of the 1930s and in the 60s. And the 70s, in fact, very famous indicators like the RSI was discovered by Willis Wheeler, the DeMark indicator by Tom DeMark, And of course, you have got George Lane, who discovered stochastics. In fact, I went over there to learn from George Lane one year. And
Wow.
I flew all the way to Atlanta, and then from Atlanta I changed plane to Houston, and there he was, one-on-one teaching me about stochastic. I had that privilege, and I really remember him for that. Yeah. George Lane, very famous in the industry. Okay, and then of course next to him on the left you see is Richard Donchen, none other than Richard Donchen, who actually discovered the turtle, the turtle system, the Donchian system, and then later on we modified it. It was modified into the turtle system by Richard Dennis. Then comes Larry Williams with his indicator, Bill Williams with his indicator, and then Gerard Appel. Gerard Appel is the one who designed the MACD, the moving average formations. So that was the era of the 1970s when the laptop came into being. And before that, there was no laptop. So the indicators were all designed by people who trade with IBM computers and only available for institutional clients. But once the laptop was discovered, then the individual trader came into being. And that's why now these indicators are still very much in use today. These 1970s to the 1980s, that includes Bollinger Band as well. And by the way, Bollinger Band is one of the very famous and very useful moving average envelopes, which can be applied successfully to trade the markets. Many ways of trading, and I think Apnan will be explaining to you how the three ways that one can use Bollinger Band. And then comes Steve Nissan, who reinvented Jap candlesticks, and then now we are into the quad H. So very briefly, that's basically the evolution of technical analysis through the ages from A to Z. You don't have to use all of them, just a couple of them will do, if you know how to combine them correctly. So for example, you can combine RSI with MACD, and that will make one system. You can combine stochastic with MACD, you can make another system. You can combine MACD with moving average, you can make another system. So a lot of systems can be combined effectively to trade the markets.
Yeah, that's a very detailed explanation, Mr. Fred. In fact, it'll be more detailed if you attend our class. And just for your information, I'm sure you've seen some familiar names like Mr. Fred mentioned, Bollinger Band. There's someone's name here is John Bollinger. Yeah, he's the one that created it. And then many traders, they also love to use MACD, moving average formations divergence, but maybe they don't know who's the creator. Well, is the one
Gerard Appel.
Elliott Wave, yes, and Elliott Wave, we have Elliott here. Gun theory, gun fan from him, and then chart pattern from Richard Schaubecker. Yes. So this is a book written by Mr. Fred himself, okay, based on chart patterns analysis,
which was discovered by Richard Schaubecker.
So in this one slide, it actually answers those traders or even ordinary people this question, whereby they think, whereby they ask, technical analysis, will it work again in the future? Well, you see, technical analysis has been evolving since the 18th century, okay, and it still will work, right? So it is not something new; it is proven.
Yeah, as long as people remain greedy and people are fearful, these indicators work because they reflect human psychology, changes in human psychology.
Okay, so that's the history of technical analysis, just the surface. Now I think we can move on to just a quick market outlook for the current market.
Yeah. Okay. You're looking at the KLSE. If you ask me these questions, I have this to say. I mean, with energy prices going up, right? Now with food prices like going up, yeah, like interest rates are also going up. I mean, where do you expect the price of stocks to go, you know?
I'm not a fundamentalist, but
Yeah.
even this, I can tell that fundamentally it's not doing so well.
Yeah, it's not good. I think those of you who are traders and trading on markets right now will agree with me. It's really a tough time. And it has been tough since 2021. It's one over year already. And we still don't see any wind behind us, you know, and so there's just no buying momentum at all. And so if you are really thinking of, buying in, in the markets that you're not going to make money, you're going to lose money because buy hold strategies just cannot work in a bear market, okay? I mean, I look at this KLCI, I mean, moving up and down, it's like a headless chicken that is running around, it's chicken poop, you know, and coop, I mean, right? And it's just not going anywhere. Fortunately, technical analysis could detect that by just drawing two lines, R1, and S2, for example, or S1. And as long as they are within those lines, that means the markets are consolidating. So for us, in the KLCI case, KLCI is consolidating. So for short term, in short, just now, after you asked me my outlook, it is weak. Right? Now, what is the definition of short term? Short term definition basically less than a year. That's a short term. 1 to 3 years is medium term, and above 3 is long term. Generally, that's how the STA, Society of Technical Analysts, they define the various kind of the time frames. So now coming back to this, where are we right now? Number one, my analysis or my outlook is based on 4 indicators, and they are technical, mind you, not fundamental. So first one is chart patterns. I use chart patterns. So based on chart patterns, can you see that the R1 and S1, okay, they basically form the channel, and there was a break below the support S1 over here. You can use a pointer to point out that support broken, therefore weakness. All right, one arrow there, and then one more time it broke. Right? It broke through S1 is already a weak market. Yeah? That's around the 1500 level. It went below that, and it's now below S2. S2 is around the 1450 level, and it also broke through S2, and even below. And now it is actually hovering around 1440, okay, or 1440 thereabouts, right? Now there is one more support, which is the latest low, which is 1427. Now let that this support hold, and then I hope that it does. And that is the last support that we see before there's a free fall down to the 1300 area, and I'll show you in the next chart about why 1300. Now, provided it can break to 1427. Right now, okay, it is still there, right? Today they dropped a little bit, but still above. So there is still, let's see whether it form a base and rebound from here. Let's hope so. But so far, all right, the direction of the KLCI is actually weak. Now the RSI is also telling us the same thing, relative strength index. Anything below 50 is bearish. Right now is, although it's hovering above 30, it's below 50, hence it's bearish. Now, the other indicator that I use to determine the strength or the weakness of the market is the moving average. There is here, you can see the index is below the 200-day moving average, right? And this is the 50 and the 200, right?
Yes, correct.
So the 50 cross below the 200 is confirmed bearish. Price cross below the 50, price cross below the 200, it's also bearish. Anything as long as price is below the indicator is bearish. Just remember that, all of you. And in price, it's actually quite straightforward in that sense. Price above the two lines, which is the green and the red line, is bullish. So right now, there is just no bullish indication. That's short term. Let's move on to the next chart, which is longer term. So with the longer term view, we use anything above 3. So in this case, we use a 20-year chart. It's quite long actually, right? That's just to give you a space view. Remember ground view, bird's eye view, space view. So we saw the ground view just now with the short term, and then the medium term. Now we look at the long term, which is the space, from space. What do you think, guys? From space now, what do we see? Is it still sloping upwards? And I draw one line to also show the slope down. Can you see that on one hand it is sloping down with H2 lower than H1, but on the other hand, it is also sloping upwards where L1, okay, L2 is higher than L1. So we got really, in terms of Dow theory definition of the direction, it is sideways. That's why we said that KLCI over the long term, although it seems so weak, right? On the KLCI stocks, mind you, they are still above the 2020 low, and of course is still below the and also below and also above the 2000 low. So basically, the trend, overall trend, longer term trend is still up. So all right. So wait, one more thing. See, note is coming down. Okay, towards. So where is the next support? And you can see from this arrow where I'm pointing to is the 1300 level. How we arrive at the 1300 level is basically determined by this long-term tentative and trend line, and so that you should find some support around there, provided hopefully it doesn't break through 1427.
Okay, that's an interesting outlook on the KLCI. Okay, I think next one we can take a look at the FBMM SCP, which is what most of us actually trade, if you haven't realized. Okay, so I think Mr. Fred, you can just make a quick comment on this.
Yeah, the FBM mid and small cap index are basically anything that is outside the 30, because many of us are not holding the KLCI 30 index 30 stocks. And many of us are holding some mid and small cap stock, right? So they are reflected in this index. So what does this index say? Is it similar to KLCI? Is it worse than? So let's take a look. So again, using just drawing lines, chart patterns, we see that there is a support being broken. So let's look at this. So we have got, first of all, the moving average is giving us two crosses. One is a bullish cross, the other one bearish. Right now is already bearish cross. That means to say it's bearish. That's similar to the CI. Let's look at another indicator. Now you just drew a support line just now, right? A line cross, and see where is it that we cut above the line, and that is right there, which is around the 5th. Yeah, there's a down gap weakness and a breakdown of the support. That is confirmed weakness, and which means it is similar that is similar with the KLCI, right? And hence the mid and small caps are also weak. They are also weak. Now, not only was there one gap, there was two gaps, and those are the study technical analysis will study gaps. What does gaps imply? Infer. Gaps infer or imply either strength or weakness depending on whether it's an up gap or down gap. In this case, it's a down gap, so it implies weakness. Therefore, and hence, even from as early as June, or after it broke out from the support, one should have exited the market, or you don't play at all. So right now, actually, it's not the right time to be really playing. If anything, in this kind of market, I would say we should devote our time to learning and preparation, okay, rather than try to be a gunslinger and try to shoot wildly into the market and hope to make some money. No, you lose more than you make.
Okay, and speaking of that, since the market is not good based on the chart, so while it is not the best time to trade, isn't it the best time to prepare?
Yes, definitely it's the best time. Yeah, prepare because there's just no momentum at all, right? And so we prepare for the good times because right now, because our definition and actually your definition of success, I'm sure you know, okay, is when preparation meets opportunity, then you will be successful, right? But the opportunity is not here, so it's time for you to get prepared, right? So after you've done the preparation, okay, now the opportunity will come again. They are like come in cycles and go in cycles. Right now, it's low tide, we call it. So you have been, everyone, fishing, right? You will know about the importance of tides. You are a fisherman, Adnan. What do you think? Do you go in and fish during the low tide or high tide?
It's definitely the high tide if I want to to be able to catch a lot of fish and easily. So other times when it's not high tide, I devote my time to prepare my equipment, strategy, and everything. It's just like trading. Right now, market is bad, so why not use this time? Focus, regain your focus, prepare yourself with the right knowledge.
Yeah, because now it's low tide, right?
Yeah.
And low tide, you just can't force. You can't let the fishes to come on shore. They just go swim very far away from shore. Like so, you can't make money in the low tide. So what we can do is we can prepare. It's like we go hunting and all that. And to hunt, actually, you have to sharpen your weapons, so that when the prey comes, in front of you, you can use the weapon to shoot. The weapon could be a knife, for example, you can sharpen, or it could be a gun, for example, you can polish it, and make it clean and so on, so that it doesn't misfire, right?
Yes, but
so,
all that need to prepare beforehand.
Okay.
You don't need to prepare yourself when you go hunting. You do it before, just like trading the market.
Yeah, right. So now's the time to prepare. Okay. And for us, preparation is actually using both ways. Also can fundamental analysis is also good to tell you what to buy, but technicals is also good to tell you when. So when you can combine these two, a TA or even FA and its application, understand it correctly, how to apply the various TA, because there's so many TAs, technical analysis techniques, right? You don't use them all. We showed you all in the evaluation, but you don't have to use them all. Just combine them correctly, like I mentioned. RSI and MACD can be a great pair, right? Just like stochastic and MACD, you apply it correctly, can be a great pair. And just like what we're doing now, the moving average and the Bollinger Band, which we're going to share with you today, is also a great pair. Tell you the timing.
Yes. So we show you the history of technical analysis. There are so many indicators, ways to use it. Okay, so out of all of them, today I'm going to show you a few unique concepts about the moving average and also Bollinger Band. And if you have any friends that are interested to learn, prepare themselves for the next opportunity, no problem. You can invite them over to join. The talk is still open. Okay, so I'll begin with the moving average. Okay, so what is a moving average? Okay, it is a simple technical analysis tool that smooths out price data. This is a very, very layman term, of saying. So it averages a certain number of price data to create smooth line on a price chart. What can it do? Well, identify the direction of the major trend, trigger buy and sell signals, and moving averages also act as the moving support or resistance. Okay, we're going to cover through the academic and theory side first. After this application, Mr. Fred will show you how. So first, I'm going to show you the simple moving average. All moving averages, all right, the rules are the same. If price is above the line, it is bullish, okay, or buy. If price is below, then it's bearish or sell. This is in terms of trend, okay? Trend bullish, trend bearish, okay?
If below means bearish and it's above means bullish. I mean, moving average can make it that simple.
Because moving average is the trend following indicator. Now, I want you to pay attention here. This is a simple moving average.
Wow.
Right?
50 cents, there's a buy signal there. All the way up to 150.
So you can see how it is acting as a support here. It's a moving support. All right. So this is a simple moving average, you can see.
Right.
So next, I want you to pay attention to the difference between this and the next one. Okay, pay attention. Okay, so this is an exponential moving average. You can see it's more sensitive. Yes, but what is noticeable is the turning point. Exponential moving average turns down, turns up faster. Okay,
yes.
And then also there's a weighted moving average. Also, it's also sensitive. So novice trader, maybe they just know moving average, simple moving average, but they don't know that there are different types of moving average. And then the main difference are just the sensitivity. So if I put all three in one as a comparison, you can see the one that reacts the slowest is the simple moving average. You can see how it turns down lowest. Okay, when it goes up also is the last one. Okay, and while the other two, exponential moving average and weighted moving average, they are more sensitive.
Which one do we use?
Okay, so this one is really up to you. You can test it out. Try exponential, simple, and weighted moving average, and see how they can work for you. Now, next one, I'm going to teach you a concept of dual moving average. Did you know that you can use two moving averages as a trading system or strategy? Okay, let me show you how.
It's less sensitive, which is good. So it prevents whipsaws.
And it's less sensitive compared to the single moving average. So here's how it works. The rule is buy when the faster moving average crosses above the slow moving average. For your information, in the example here, we use 30 period, the red one, and then 50 period moving average, the blue one. So faster is referring to the 30 period. So over here,
that means the red color one.
The red color. So buy when the faster one is above the slower one, and sell when the faster one is below the slower one, such as over here. So you see, if there's a crossover here, that's a buy signal based on the dual moving average technique. Okay, and then you only sell when the faster moving average crosses below. Okay, so in this way, you can see if I were to stick with just single moving average, there will be whipsaws here, here, and here. So one way to reduce the whipsaw, you try dual moving average.
I think it's great. I mean, I can see from this example alone that the dual moving averages gives you less whipsaw, more stability, and so on. And and I can see beautiful buy signal in Inari and around 137, and then no signal until they cross again, and the rate below the blue is 336. Wow, it comes to 145%. That's, I mean, by stock market standard, a stock market is really good. Yeah.
Okay, and the next one, Mr. Fred will show the profitability of using just the dual moving average technique. Mr. Fred?
P-trans. This P-trans is example is actually recently, right? Just a couple of days ago. Even right now, they're still on buy and there's no sell. So now, how do we use the moving average here? Same thing. We draw two moving average over price. Now the one thing is my parameter here is slightly different from the earlier example. This one we use 10 and 50. 10 cross 50 buy. Sorry.
5 and 50.
5 cross 50 you buy. 5 cross below 50 you sell. So starting from there on September the 2nd, there's a buy at 62. It's a wrong buy. Okay, the market turned down. So we exited the market, but with a profit of 2 cents. Sorry, 4 cents. And buy again, right? At 64, wrong buy. You turn back down and you cut the losses. See, the important thing is the moving average is very mechanical, objective. It will cut if it is wrong. And when we reverse back to a buy again, here at 60 cents, on March. And guess what? Until today, close at 77 cents. It's still, P-trans is still on buy mode. See how good? And we're talking about in the down market, right? Like this one, that, how to make money and so on. You still can, right? If you know where to pick the stocks. So we use a scanner or filter, all right, a scanner which is our turtle scanner, and we do a scan, and this one will come as one of the stocks that are still bullish in a bear market. So you want to know a few other stocks that are still like that, okay, you still want to be in this position even in this kind of market, then this is the stock. So again, so within these 3 months, how much did it make? The answer is 32%, 32.5%. Is that good or not? I think it's fantastic.
Fantastic in this very, very weak market.
And it's,
Just using the dual moving average concept. Okay, I think next one we'll move on to Bollinger Band. So what is Bollinger Band? Right, so Bollinger Band is an indicator with 2 bands, upper and lower bands, and a simple moving average in between. So the bands, what can they do? They reveal whether prices are high or low on a relative basis. They tell traders when the market becomes volatile, okay, and they capture prices inside the bands 95% of the time. Okay, so let me show you how it looks like. So this is a Bollinger Band, right? So
I call it the North and South demilitarized zone, DMZ. Anything above is North Korea, anything below is South Korea. In between is neutral. Okay.
That's a nice one. Okay, so Bollinger Band, I'm going to show you here things that maybe you won't realize or difficult for you to find out online, okay, which is the squeeze. So did you know that the bands, when they squeeze and expand, there are meanings? For example, over here, you can see there's a squeeze there, right? A constriction. So Bollinger Band, the concept is, if there's a constriction of the bands, it usually is followed by a rapid price movement later.
Right.
Okay, so that means over here the market is quiet, but it's likely to follow by rapid price movement.
Right.
Which we can see the next one here. You can see the band suddenly expanded. Then we know, oh, market is volatile. There is increase in trading activity. So when you see this, then you can know, oh, now this stock, this price is active, volatile. Okay.
So I would like to buy above the band, the upper bands, which is there.
Okay. And next one here, just want to show you. It's just a simple strategy for Bollinger Band. Double bottom, but the Bollinger Band version, which is first, you need a first bottom outside of the lower band, such as over here. You can see L1, followed by a second bottom, but within the lower band over here. So the next one here is we have to see a close above the simple moving average. That is the buy signal. So you can buy around here. So this is just a very, very simple strategy and concept of Bollinger Band. Yes, there are many ways to use it. Bollinger Band is really a unique indicator. Now on the profitability on P-Trans, so Mr. Fred can show you how.
Here is yet another way to use the Bollinger Band, and that is the DMZ way, the demilitarized zone way, where you write it down. Okay, the formula is you buy if today's close is above the upper band, and you sell if the close is below the lower band. Right? We use one standard deviation. Okay, and so based on this example, where would the buy be? Will be at 68 cents. Why? Because it broke out of the gray band, right? So that will be at 68 cents. But it came back down, right? And so we sold at 66. So we lost 2 cents. That's fine, Okay, when we're wrong, we cut our loss. And we stay out of the market. Then there's another buy signal at 62 cents. And but it failed to continue its rally, came back down, we cut our loss at 60.5 cents. So we lost another 1.5 cents. Okay, no problem. We're out of the market, we slam all the way down, and then this was the what they call the pandemic that caused it to crash and then make a U-turn, and it broke out of the upper band at 59 cents, and we re-enter buy again at 59 and hold it until today 77.5, when it's still a hold. So here is how the Bollinger Bands can also assist to time our entries and exits. So it will be the same as similar to the moving average in this case. So they two can combine together, or they can be used as then a loan. 25% in 3 months, is that good or not? Of course, very good. Fantastic. Putting that money in the bank will give you 2.4% 1 year. Okay? So this is one way to use the bands, which is the upper band and the lower band. Okay.
Okay, thank you, Mr. Fred, for sharing the profitability and the practical side of these indicators. Okay, now just to let you know that here at F1 Academy, we actually teach both the academic side and the practical side of technical analysis. So on the academic side, what you will benefit, well, if you want to take exams, get qualifications, you can do that. But if you want the knowledge for improved trading skill, we have the practical side of it as well. So what we have to offer you here is a one-stop place for you to learn the theory, the practical side, and not just that, the continuous support, the trading system, all in one place over here. Okay, so that's some of the benefits that you'll get. And just to let you know that how I came and found F1 Academy.
Yeah.
So you see,
I think it was your dad, wasn't it?
Was partly my dad.
Partly your dad, yeah.
Okay, so I enrolled into PCFA while I was still in my PhD degree. I was still in my year 2. Okay, that's when I found the chart pattern analysis book and I found Mr. Fred.
Yeah.
Because of that, I'm able to trade today, and I'm employed in a relevant industry, trading.
Yeah.
So
where
back
can you
then,
find my book?
Popular.
Okay.
You can find it.
It's still popular in popular.
I bought it in Popular 1 Tama. Okay, so you know why I decided to take the course was because back in 2018, my mentality was, at that time the market was not good, nothing to buy. So that means I thought now is the best time to learn, so that I can focus on just learn and learn and learn. So some people, they want to learn only when the market is good, but it'll be too late. Had I waited until I finished my degree and only to start learning in 2020, I would have missed out the glove rally because I wouldn't understand what was going on.
And the tech rally, yeah. We make good money there around, when the market turn around. But we never know. Right now it could be down, and the next week the market could turn around, and technical analysis could tell you when we are turning around. When right now it's making low high, that's how we know that the market's not there. But when it starts to turn, the market will show signs and tell us by making a higher high and higher low. Remember that higher high, higher low will tell you that the trend has changed, however short, to up, from down to up. Right now, there isn't any of those except for P-Trans, Harlan, a couple of them, UWC. Yes, there's a bit of, the UWC got a bit of a U-turn, but the majority of stocks are still down. But here's what I like about the majority of stocks being down. That means the majority is almost always wrong. And so therefore, we should be expecting a bottom. So just nice to prepare.
For trend follower technical traders, we are waiting for a bottom. Okay, then we move on with our course. Okay, our intensive course. What can you get? What reasons you should look at, or I would say dreams. Okay, one or two or more of my dream, my goal was achieved thanks to F1 Academy. So reason or dream number 1 is, just like myself, I wanted to stand up from other traders. So I wanted deeper understanding in technical analysis and indicators to improve trading skills. So if you're any one of you out there, you want to improve trading skills, to improve your profitability, well, this is one of the reasons. If not for you, maybe your children as well. Our youngest PCFD students was
16 years old.
16 years. 16?
Yeah, 16.
16, and it was a she.
Still underage.
She.
Oh.
Still okay.
Oh, you mean sweetie?
I don't know. I just know it was someone 16 years old. When I took it, I was 20.
Oh, okay. You're one of the youngest girls.
One of the youngest, but not the youngest. So it can be for yourself or for your children, future trader. And then dream number 2, if you want to have a qualification to be employed in this industry, you'll need a gold standard diploma or qualification. So we can help you with that. We prepare you for the external exam from Society of Technical Analysts. This is like ACCA, but ACCA is for accounting. This is for technical analysis, a gold standard qualification, followed by another qualification from the International Federation of Technical Analysts. And if you pass this exam, you just have to pay extra fee to get another certificate, which is here. This is mine, Certified Financial Technician. So thanks to this, I got this qualification. And then also, some of you, maybe you want to be employed in big firms like JP Morgan, Goldman Sachs. They're all looking for this STA and CFTE qualifications. So if that's one of your dreams, we can help you with that. And number 4.
And then our lecturer.
And our lecturer, yeah.
Sifu
One of our lecturers that will teach you is actually from UOB Kay Hian, Singapore. So we are very lucky to have someone very experienced like him to be teaching the students.
And Sui Ting also got employed in UOB Kay Hian after she passed the STA exam. Then she applied for a job in Singapore, STA. In UOB Kay Hian, and she got it. Also, of course, Sifu was there to recommend her to UOB. And so now she's in UOB for already 4 years like that. But because it all started with this diploma that she got. That's how useful this is. This diploma is. Makes a difference, a big difference.
So anyone wants a good career in this, for yourself, for your children, for your friends, you can let them know.
Yeah, the diploma in technical analysis is the right qualification.
Another reason, or dream number 4, any one of you who are interested to teach in university or college, you need to have the right knowledge and qualification. But not just teaching, even as a speaker, like myself, I was invited to give a talk in a few universities, Asia Pacific University and a few others. Sometimes Kenanga also invited me to give a talk.
Yeah, and also UUM and also UITM, they're all beginning to embrace technical analysis already. Unlike those days in the 1980s, when I tell people about I use technical analysis to trade, they say, "What? That's voodoo finance, It's like alchemy. It's not chemistry, Alchemy, so it's not scientific those days. Now, everybody resorts to technical analysis because fundamentally, in one night, nothing changes one day, and yet the market will move up, swing down like that, and make your head go burning and turbulent. So, what are the indicators that can help you to handle that kind of thing? Only technical.
Okay, and then the next one, if you want to be a successful author like Mr. Fred himself, he wrote the Chart Writer's Analysis book, best-selling until today. And just a few years ago,
last year,
last year, a publisher from Vietnam requested for them to translate the book in Vietnamese language. So, Mr. Fred, could you have written this and be a famous author if you didn't have the STA and CFTE knowledge?
No, I wouldn't have that kind of recognition that people give me. As a result of me having this qualification, people just look at the qualification and they know that you know to a certain extent, a lot of extent about technical analysis. No need to talk 1,000 words. One qualification paints 1,000 words. That's, the best way of explaining how useful this qualification is with the title behind you. No need to talk further. You invite me for talk. You know that I will talk sense and not talk rubbish.
Okay, the next one here, just let you know that maybe you're wondering, is it just for stocks? Well, technical analysis, when you learn it, is applicable for all stocks, equities, indices, forex, commodities, crypto, yes, futures, FCPO. And also, if you're in the right market, you can learn how to make profit, whether the market's up or down. Okay, and then just to share with you here, other than the knowledge, the fees you'll be paying, it's not just for the knowledge, the teaching, the lecture, but also these are the tangible and intangible benefits you can get. You have our 13 powerful modules. You can read them at any time. We also have lectures to teach you throughout the course. And then if you need a sophisticated charting platform, we can also help you with that. And we also give you our exclusive indicators. And not just that, Telegram support will still guide you after the course, because we're going to ensure that you can be efficient traders and analysts. Okay, and also you can have another charting software to trade other markets like Forex. Right, you also have the access to newsletter for 6 months. Okay, so all this, we value them at this price, but we're only charging 25,000. Okay, and then but those who are here, we're giving special discount until this coming Sunday, 10th of July. So we're reducing the price by 500 ringgit. Okay, so if you think about it, this is a good offer with all the benefits that we'll provide to you. Not only we teach, we give you platform, the necessities that you need.
So this is how much so either you are a tech member out there, if you are our existing member who is joined our newsletter, you are in our FIFO group, for example, and then you get it as a tech member price. Is that, am I correct? I'm just trying to go to clarify. So it's 16,000, so it's much cheaper.
One of us already put the details in the chat box. You can, for more information, you can contact them.
Yeah.
Okay, so this course, when is it starting? It's starting soon. It's in July.
Yes, on the 16th.
16th of July.
16th July.
So the class will be for 3 months, every Saturday and Sunday. Okay, so if you're interested, you want to achieve all your dreams, okay, for yourself or for anyone you know, your children, this is the one for you. And then just before we end, okay, just to share with you, next Saturday we'll have another talk. Okay, this one is on Ichimoku. Okay, we'll show you how to use Ichimoku, explain the theory and application behind it.
It's yet another way to make money from the markets using a Japanese technique, famous Jap technique. And that will be next this coming Saturday.
Yes, this coming Saturday, 11 to 12.
Yeah.
Mr. Fred, there's a question there by Paran Jyoti. Ringgit is bet against US dollar. Will that affect the market?
Well, it is in a way affecting, isn't it? I mean, people are just selling off the stocks and then send the money back to US dollar. Yeah, it is currently already affecting the market. It has been so. Right. So, but for us, we look at the charts. Okay, that will tell what the fundamentals are really reflecting, and they are in the same direction. And so, so that's the answer we get. Right?
Okay.
It is affecting that. Yeah, but we look for 30 points.
Okay, I see some of you wanted to screenshot the promo price, right? Okay, here it is. Right.
Yeah,
so
this one is promo. Yeah,
yes.
compared to just now that one, this one is the more promo price. Okay, take advantage of it because you really go up to 10th of July. And how good is it? I mean, if I can say a few words about this price. I mean, for me, it's so so good value for money. I mean, 18,000. I no need to give discount, so I will put the money gladly pay this price and get this qualification. Because really, with this knowledge that you will acquire from this course, well, it can help you to make 10 times what you paid for, which is you could make 180,000 from the markets. Okay, when the markets make a U-turn, you want to know which stock to buy, right? And this course will precisely equip you with the knowledge to tell you when to buy and when to sell. And how much you make depends on how big you play. So you might be a bigger player. Instead of making 18,000, you could make 1.8 million instead of 180,000. You could make 18 million if you are a fund manager. And so how much value you get depend on how big you are a player. But this is a small price, therefore, to pay to make a huge amount of money. Okay, I just want to reiterate that. Our past students obviously testified that we got 20 in the past intake. We got 7 distinctions out of 12 we said, which is fantastic, yeah. And for paper 2, we got 2 distinctions out of 12. So that kind of track record we have, and that makes our school actually the top school in terms of technical analysis in Malaysia. And we are the first one who started it. I was the first one who started it in Open University, okay, and then later on in AU, then now with Asia Metropolitan University. Okay, so note this price. Special discount is up until 10th of July, after which we go back to 18,000, which honestly, to me, it is still very reasonable. Nowadays, you get a degree for 50, 60,000 in the MBA, right? Getting an MBA, you need to pay that kind of amount. And yet, when you come out, this qualification can earn you a job or teach you how to trade successfully. Whereas I'm not very sure if that one is practical enough, okay, to do that. It's more on the academic side. This one is on the practical side. Okay, the gold standard in technical analysis. So this is what I wanted to share with you.
So thank you so much, Mr. Fred, for the sharing and also a bit of our history with the students. So yes, it's already 2 p.m. We passed the time by 5 minutes.
Okay.
So thank you. Thank you everyone for joining us. So we hope we can see you in the next talk where we will teach you on Ichimoku.
Yeah.
Okay. So I'm Afnan.
And I'm Fred.
See you next time.
See you Saturday, man. Okay. Bring your friends along. Okay. Can you let them know that we've got this great seminar and on technical analysis and on Ichimoku and how to apply that to trade successfully the markets. Okay. Prepare yourself. Opportunity will be coming. It will turn around again, and then when you have prepared and together with the opportunity, you will achieve success. Success is therefore equal to P plus O. Remember that. Preparation meets opportunity equals success. Okay, guys?
See you.
See you.